Good afternoon, everyone. It's my pleasure to be your moderator for this online table talk series today. I'm Pulkit Goyal, and on behalf of the organizers, Oracle NetSuite and etcfo.com, I extend warm welcome to all of you. We appreciate you taking time off your busy schedule to join us here today. As an introduction of myself, most of my career spans over the diversified large MNC conglomerates who are proud of some of the product services as old as 100 plus years on one hand. On the other hand, it also has a mix of new age startup businesses, which are more humble, agile, and nimble. And with this unique experience, I shall try add my own perspective to the whole discussion. All right, to get started, let me introduce speakers here with me today. They all are experts in the topics that we're going to discuss. I would request the distinguished speakers to turn on the videos as I introduce them. Our first speaker is Mr. Chintan Thakur, CFO and Executive Director, InfoEdge. Our second speaker today is Mr. Rohan Mittal, CFO of Revigo. Welcome, Rohan.
Thanks, Pulkit.
Third speaker, Ms. Meeta Agarwal, CFO of Licious.
Hi, everyone. Thanks, Pulkit.
Welcome, Meeta. Our fourth speaker today is Mr. Harshit Goyal, Director of Finance of Atlan Technologies.
Hi, Pulkit. Thanks for the introduction.
Hi, welcome, Harshit. Fifth speaker, Mr. Dheeraj Toshniwal, Partner Digital Transformation at BDO.
Thanks, Pulkit. Good afternoon, everyone.
A sixth speaker, Mr. Benjamin Ma, Head of Strategy and Business Development, APAC region in Japan, Oracle NetSuite.
Thanks, Pulkit, for the kind introduction. Happy to see everyone online.
Last but not the least, Mr. Girish Bhutane, General Manager, Oracle NetSuite India. Welcome.
Hi, everyone. Good to see everyone here.
Once again, warm welcome to the Table Talk series, dear speakers. And before we get started, let me set a little bit context here. Startups are going through, I would say, a very different and a unique time these days that we are listening to. Funding winter, hiring freeze, cost cutting, growth versus profit dilemma, inflation, fear of recession. I mean, you talk of the problems, the list is really, really long. And the startup ecosystem is buzzing with diverse opinions and views around what's going on here. And amongst all, the mounting pressure on the CFO to sustain the path of profitability. It's going to be a thought-provoking discussion today. And that brings me to my first question. And looking at you, Chintan, what do you think around the funding winter for startups that across stages in these past few months have come up? And do you think the trend is likely to continue given global headwinds? And is this the time for the startups to go back to the basics like bootstrapping and profitability, even at the cost of growth? What do you think about it, Chintan?
Well, look, there are two parts to what you're asking, right? Let me take the later one, right, which is about the frugality and profitability. I think regardless to what the environment is, right, being a frugal, I think it goes in line with being an entrepreneur. It's very much, as the mindset, that's what it should be. Right? Any shrewd businessman or anyone with a business acumen will understand that customers' money is always better than an investor money. Customers' money is always better than the capital. So you should always try to see whatever you can use from the customer's money and whatever growth that you can obtain from that. I think that is best. I, as a CFO, would also say that, look, I think whenever there isn't some kind of an expenditure, you need to put it through multiple tests. Right? You need to look at it saying whether it's a fixed expense, variable expense, whether it's an experimental, whether it's a discretionary, whether it is going to give you returns in short run, near term, or is it something which is a long term, right? So you need to put the expenses in a different bucket, and then see whether you should really want to spend it. Of course, the context of the availability of funding is very critical. Now, let's suppose there is an expenditure which will help you in getting that funding. Then I think it's a necessary expenditure. You may want to spend it, right? It's an essential expenditure. But anything which is non-essential, like a body fat, you should always remain slim. The first part of your question, I think the funding environment has definitely changed, and maybe we're just seeing a starting of what changes have happened. US Fed printing whatever $5 trillion dollars and all that. Obviously that makes all the investors look very smart. At least for some time it made them very smart. But the truth is that that's not going to stay, and the volatility has gone up. the cost of money has gone up. So definitely the environment has changed, and one needs to take that also in a context to organize how you are going to be, whether growth or profitable, and where the right balance for any organization is. You need to take that context into account.
Thanks a lot, Chintan, for your views here. What do you think about it, Rohan?
First and foremost, I can use that term. I think the companies, the team, and that includes the CFO for sure. The primary responsibility is a path towards profitability. Yeah, and that is an unwavering focus, which really cannot change with the seasons of the year. Honestly, I mean that's the way that we have looked at these things.
Thanks.
See, what I was trying to say, Pulkit, was that irrespective of the season, yeah, funding winter or funding monsoon, irrespective of that, focus on profitability. Whether we are able to achieve it in a 12-month horizon or a 24-month horizon would depend from company to company, model to model. The unwavering focus on path to profitability is, I think, something which is non-compromisable. Yeah, that's the bare minimum requirement which any business, startup, big MNC, doesn't matter. Any organization, yeah, has to follow those principles. I'm just going to add one or two perspectives on what we are seeing as funding winter. See, there is a huge opportunity also sitting there. The first and foremost opportunity is both venture capital funds as well as private equity funds are sitting at record amounts of dry powder. Yeah, I believe 2 trillion and 500 billion are the numbers that's floating around for the PE and the VC dry powder numbers which are there on track. These would be amongst the highest that we've ever seen in terms of numbers that are available. Obviously, this money will get deployed. The only question is that it may not be as easily available. The valuation matrices may not be the same that we have probably seen in the last few months, but that money has to be deployed. So deserving startups will have access to funds. There is absolutely no concern that we see there. The other thing that I would like to mention over here is that typically what happens, and we've seen this ourselves in my own organization as well, temporary scarcity does lead to creativity. People do tend to look for alternate sources of funds which can be cheaper in terms of cost of capital. Yeah, today most of the private banks, and this was not the case pre-COVID, most of the private banks do have new age groups which are extending working capital loans, etc., to startups, which was not the case earlier. And the costs are fairly competitive versus venture debt. So there are alternate sources of capital which are available in order to tide over this short period where we may see less checks getting cut. But I think this is an opportunity for the entire team at all our organizations to look at each and every expense with a very clear lens of whether it's going to add to my core value prop or not.
No, thanks a lot, Rohan. I liked especially what you said about the deserving startups will always have unrestricted access to the fund. So I think it resonates pretty well. But at the same time, it's not a secret that we are going through turbulent times. And looking at you, Girish, General Manager, Oracle NetSuite, economic dislocations create opportunities for financially disciplined companies to leapfrog competitors. Downturns have also been the death nail for companies too dependent on free-flowing venture funds. Today, startups have resorted to methods like conserving cash, limited hiring, controlling burns, cost-cutting, etc. What traits enable some startups to succeed in trying economic times, while others barely manage to stay dead alive? What do you think about it?
As we all know that startups face this continuous challenge of survival, right from the point of the inception of the idea to what I call as one of the most critical milestones for a startup, which would be an IPO. Entities that have successfully managed critical and tough economic times are the ones obviously known to take prudent decisions in their businesses. And I think Chintan spoke about it, and so did Rohan, slightly touched on those points. Amongst all this, the more critical is that these business decisions are backed by the 3 V's of finance. And these, which I call as vision, viability, and visibility. And in fact, when I looked at the poll, I was not very surprised. Some of these things, just came up there. while I will touch on one of them, which I feel is the most crucial, but entities which have been able to successfully handle such situations are able to better optimize, better drive, and grow the idea into a successful business venture. Startups which have shown clearly that they are able to ensure optimum financial visibility are the ones who are not only able to capture the venture capitalist funding and the PE funding, but even able to better manage their day-to-day operations. Like if you're looking at capability which can help you capture real-time data about your businesses, which is related to your receivables, your payables, integrated with your order to cash, or entities that have successfully used analytics to understand the business visibility, processes and process management, bottlenecks, that they are facing. And most important is investor reporting. I think this becomes like a pillar for entities who are looking out for these funds coming at a continuous flow. Keeping highest possible standards of risk compliance, I think that is another very, very big area. And I think, again, it came up in the survey outcomes. I think we are all facing, various kinds of compliance requirements. And I think all CFOs here on the call here, and I don't need to state things like, INDAS, gap analysis, IFRS standards. We're talking about SOC 1, SOC 2, SEBI requirements. In short, we're talking about a complete set of control on the compliance needs. And entities, in order to grow, I believe, need to invest early into technology engines such that they become flexible and agile and adaptable. As in, like, if you need to diversify quickly revenues across streams, or you want to stop a particular product line or get into another region or a subsidiary, but at the very same time ensuring that your regulatory compliance is maintained, such that your country specific tax filings, your financial statements do not go down in terms of speed or accuracy. I think these are the things which, Pulkit, I believe entities which have been able to successfully maneuver themselves are able to take advantage of the situation. And I think Rohan mentioned that flow will not stop, but at the very same time you will be far better than the others, like you rightly said, are just managing to stay dead alive.
Okay, thanks. So basically, if I can summarize, you said, Girish, that CFO need to be in the control of the processes, information, compliances, as well as the resources. And
Absolutely.
this can increase their efficiency, thus transparency, and also eventually profitability. Yeah. I think a very important takeaway for me here. Thanks a lot, Girish.
Thank you. Thank you.
Okay, all right. Moving on. Let's talk unit economics now. And looking at you, Meeta, now, how crucial do you think this for you to spur profitability? And can you tell us about any best practices that you follow in tracking unit profitability?
I think I'll take one, rewind a little back, because, startups have been in this honeymoon phase, marquee investments, gravity-defying valuations, fundraising. That's all great, right? But that doesn't take away anything or, from building a economically viable enterprise, right? We've spoken about growth and we've spoken about profitability. Unit economics is a beautiful phenomena which ensures it's not growth versus profitability, it's growth and profitability, because that's what you need, right? If you look at the startup space in particular, right, whilst the more traditional industries look at unit economics more at a product level, which is, each product or service or SKU that I'm offering to the market, how much money does that generate? But in the startup space, I think it's more customer oriented. And how we tend to look at it is, what is the possibly most optimum amount that organization should spend to acquire a paying customer, considering the potential future value, right? And linked to that is, how short can you make this payback period? So those are really the three facets that we look at when we are looking at unit economics. What is the amount to spend? How much will you get back, or from that customer, and how quickly can you get it back? Because that then flows back into your working capital requirements, and what is the how do you maximize runway, as it is called, with the same amount of funds and liquidity available, which is the case, as everybody mentioned, in the current environment. In terms of, so definitely, right, I think it's one of the single most important factors in making sure that we are spurring profitability or even achieving it in the first place. Coming to your second part of the question, which is, some of the best practices. I think the idea is that when you are incurring customer acquisition cost, right, or when you're setting your basic business or product design at the initial stages to set it right, it's very easy to experiment, and the cost of that learning, right, is much lesser when you're in the initial stages compared to when you have a scaled up business and then you're trying to reinvent the entire P&L or restructure it. So I think that's something that we really look at my org, to make sure that whenever you're launching a new city, whenever you're looking at launching a new product in the market, make sure that it is set right at the outset so that it doesn't have to be rejigged or redesigned. And that's also, it flows into the general principles, because what happens is a lot of startups do not focus on either unit economics or the product market fit or design at the initial stages. And then the expectation is that as we grow, the scale benefits should accrue. That, I think, is misplaced optimism that, or, a notion that we should all refrain from. That's really my take on unit economics.
Got it. Thanks a lot. I think quite interesting take on that, of especially what you mentioned about reintroducing or making the changes in the product after introducing into the market, because this may really put you in a spin. So thanks a lot for that. Rohan, what do you think from Revigu's perspective? What's your thought here?
So Pulkit, we firmly believe that we can only improve what we can track. In our case, volumes are something which are to a great extent market dependent. Yeah, depending on how the GDP is doing, how the consumption in the market is happening, etc., etc. One can do deep discounting to get customers, etc. But since COVID, we've not been doing that. Yeah, so everything will boil down in our path to profitability. Everything will boil down to unit economics. Yeah, because the volume is where it is. Fortunately, the company had put in strong processes, and all tech-based processes. These are not manual processes. When the operating systems were getting created in-house, there was entire focus was on ensuring that unit economics can be tracked at a day-to-day level, yeah, if not in real time. Our operating SLAs are tied into these unit economic models so that we can do daily tweaks. And at the end of the day, we know that how much cost we'll have to incur to deliver certain service level to our customers, because that's really that's the field in which we are all playing. I think as a CFO, at least 20-25% time would go in tracking these unit economics, helping the teams take the right calls in real time, and ensuring that we stick to monthly, quarterly projections from a profitability that we spend on ensuring that we are tracking the right unit metrics and taking them to the natural conclusion. Yeah. The procurement to pay cycle also has been created in this manner in our organization, that each cost is scrubbed at multiple times without compromising on the whole decision-making process. Yeah, so we have to retain the agility of a startup, but at the same time, there are multiple phases through which each cost item, before even a procurement is done, is scrubbed to ensure that we are procuring what is an absolute bare necessity. Hiring has always been a privilege in our organization. Yeah, and each hiring undergoes deep deliberation. Yeah, on what value will that person bring to the table? How much critical is it today? Can it be deferred tomorrow or not? Those are the kind of conversations which are very, very active conversations. Focus is entirely internal sustainability, self-sustainability. Yeah, because the fundraise cycle has to come to a natural stop at some point in time.
All right. Thanks a lot, Rohan. Let's switch gears now. And let me now move to our another guest speaker, Dheeraj. Dheeraj, what do you think about finding new revenue streams, expanding business overseas. These are great strategy for growth and profitability. What kind of challenges do startups face when they explore these routes?
Thank you, Pulkit, for the question. Right. So, if we talk capitalistic society, right, we all of us are wired for growth, right? We are looking for new products, new services, going into new geographies. We're always looking where the next set of growth can come from. So, and challenges are part and parcel. Anytime we grow, there are challenges. So, we typically see 5 sets of challenges come up over and again. Right. First is funding. Chintan and Rohan already talked about the headwinds in the industry. If we look at launching a new product, if we look at going into US, Europe, or Asia Pacific markets, right, it needs a lot of cash. And I liked Chintan talking about customer money is better than investor money, and if we can generate cash out of the business, nothing like it. But then at times the speed of growth is more important, and we need to take investor money. Right? So when the funding is slowing, investors will do a lot more due diligence going forward, and they will ask for a lot of data before making the investment decision. So the startups need to be ready with how the previous set of capital was deployed, what kind of returns the previous deployment has generated. All that data needs to be available for investors to make decision. The second challenge we see with the growth is organization change. Right? When we are running one product from one office in one, let's say, one geography, our founders can potentially run the whole operation out of their head. They don't need any technology. They don't need any support. But then as the business grows, the organization structure need to evolve. Right. So I'm not talking about only the legal entity structure that has to evolve as we grow, but then think about decision making. Think about communication and collaboration. Think about new skills needed in the organization. So all of this again goes back to what kind of data we capture and how can we enable the organization for growth with that data. So that's second. Third is talent, and Rohan touched upon it that hiring is a privilege in his organization. But as we get into an environment where we need to meet deadlines, right, we happen to lower the talent standard. And that causes issues, right? So one wrong hire can put us back a few weeks, if not a few months. And that's where I think, like funding, talent funding is equally important. We need to know where the talent is going to come for this growth right up front. Right? Fourth challenge we see is operational complexity, right, with the growth which comes in. So multiple geographies, we are worried about compliances in different jurisdictions, new revenue streams, launching a new product may need an entirely different set of processes. And it becomes very, very easy for us to start losing focus on efficiency and in turn profitability. So an end-to-end operational visibility is very, very important to avoid these complexities introduced by growth. And the fifth is the tools and technology. So almost every startup starts with Excel as the core operational tool. And as the growth happens, we happen to add one CRM, add one customer servicing software, add one accounting software, and so on, right? This hodgepodge of technology also hinders growth as we try to grow fast. And so Girish touched upon investing in scalable technologies. So we have to look at those scalable technologies which grow with the business, grow with our needs. Right? To summarize, growth will bring newer challenges. Our probability of success depends on how we address these challenges.
Oh, absolutely, Dheeraj. I cannot agree more, and especially I liked your comment about investing in the talent and skill sets. most of us, if not all, tend to discount that. And I think relevant investment is also needed there. Absolutely right. While startups do have cost pressure, and also I would relate it to what Chintan said at the start of the meeting, cut the body fat. And I don't think the right skill set would be a body fat. It's a good fat that we need in our body. So thanks a lot for this great takeaway from this. Thanks a lot. Okay, all right. Let's move around the table to another speaker here, Atlan, Harshit. Harshit, your company Atlan Technologies received Series B round funding at $450 million valuation. So at first, many congratulations to you. And
Thanks,
could you
Pulkit.
tell us more about Atlan's impressive growth journey and the learnings?
Thanks for the question, Pulkit. Right. For this, I need to take you, all our panelists and all our attendees, a little back in the history of Atlan. So, let's say it was around 2014, 2015. A few years ago, our team worked as a data team for the organizations. And we worked with the larger organizations, non-profits, on data for good projects. That is helping these organizations to solve for critical challenges using the data. And working with these organizations at the scale at which they operate meant making sure that in terms of the security, in terms of the cyber protocols, we were never compromised. Now, many of these organizations were typically actually been using old legacy systems and on-prem infrastructure. And to work with their data, and our team would be required to make frequent visits and sometimes even spend months at the client's offices, which is actually not the best place to be in. And we dealt with delays, complexities, and collaboration challenges. Taking back all of you further back in the timeline, a few decades later, data was primarily being consumed by the IT team in the organizations. But with the time, data teams have started becoming in the mainstream. With the internet exploding and more data being created every day, organizations have started building the data as a function within their team, hiring for the talent for the data related work. And this shift has pushed the need to have more modern solutions for the data team. Fast forward today. Today, the data teams are more diverse than ever, be it data engineers, scientists, analytics, you name it. And each of these people have their own favorite tools, and equally there are more diverse tools there in the ecosystem. Earlier solutions were being fundamentally built upon monolith architecture and deployed on-premise. It would take months to actually set up and maintain, and this would often land up companies into the technical debt. Each data system would be having its own installation, compromise, and companies would be able to roll out unless and until they would be able to push that update into the cloud. But today, because of the cloud computing, we have been able to build Atlan. Atlan as a data collaboration workspace that is fast, that is flexible, and that is scalable for the needs of the modern data teams. Now, building Atlan as a cloud-first native application has helped us create experiences for the data team that we wish as a data team ourselves we would have had a decade ago. So Atlan is a remote-first company with a team spread across 25 cities across the world. Our team lives on the cloud. Every single tool, minded we have 50 plus cloud applications tools that we are using, it is built for the cloud-first world. Similarly, Atlan is building a next generation data catalog for collaboration, for governance, for lineage, for the data teams across the world. And it takes the entire team of the diverse people set, as Rohan was mentioning about, be it engineers solving for the scale, be it scientists solving for the models, be it business users solving for the business use cases and understanding the problems. And we are able to bring all these diverse personas together to seamlessly collaborate with each other because of this modern cloud solutions. And our core focus fundamental principle is the embedded collaboration, which means bringing and work happening with whatever you have with, right? Like in terms of the least amount of friction. And I believe this is the kind of the power we would have been able to, it would have been impossible without the cloud computing technology. So that's about a summary about where the Atlan was and where we are actually today.
Thanks a lot, Harshit. Quite an impressive journey. And this now takes me to my next question, pretty much relevant to what we just discussed on digital transformation. And looking at you, Chintan, being part of one of the first internet companies in India, what do you think and what does digitalization mean to you as a startup at an early level of maturity scaled? And the kind of digital transformation that can help chart a sustainable path to profitability. What's your take on this?
I think where we are at this stage is that if you look at what's happening globally, just not in India or just not in an internet companies, but globally, everything is getting digitized. Right? So whatever that can be digitized will get digitized. I think what pandemic has done is that it has just accelerated that pace of digitization. But otherwise, no matter what that process is, everything is getting digitized in this. Now, I'm not saying that the offline world is going out, right? There could be certain situations where offline, online, both would be there. There would be a digitized, there would be a non-digitized version of it. And the balance would be different as per the different processes. But the truth of life is that everything is going to get digitized and it's happening much faster than what we all think. So I think digitization is very important. Digitization is creating a lot of value. It is accelerating the value creation and it is here to stay. So I think the faster that we go for the digitization, the faster we go for the automation, whether it's finance or non-finance, whether it's tech or whether it's as mundane as admin function or whether rent agreement management type of something simple, everything is going to get digitized and we just cannot live with it without it. And there's a huge opportunity that comes along with it. Obviously, there are challenges, like Girish said, but everything in life, when it grows, there are some going to be chaotic situation. But as long as it's a functional chaos, I think it's all good, and it will create a lot of value. And India, particularly, I think has at the cusp of that opportunity. When the whole globally everything is getting digitized, I think we have a great opportunity lying in front.
No, thank you. Cannot agree more. Looking at you, Dheeraj, what do you think about it from BDO's perspective? Would be good if you also add another unique perspective from your side, as Chintan mentioned that the earlier we adopt, the better. But will it make all of us as human beings irrelevant going forward if everything gonna be digitized later on?
Thanks, Pulkit. So I'll take the second question first, right? There are so many different articles about these jobs will never get automated or robots will never replace human. So I'm a firm believer that human race will evolve to do what it does best, and technology will replace what we don't do well, right? And so we will have our own newer function in the, let's say, robotic society, and we will do more intelligent, more emotional work in the society, and obviously robots and machines will take over all the mundane tasks. Coming back to the digitalization question, right? So digitalization in general is very, very ambiguous. Everybody has a different perspective, right? Some people, you go to a lot of government offices, still it's like just putting data into a computer is digitalization. For some, it's just removing paper from the process. And for companies like Atlan, where we are doing large set of data analysis to predict future or to build a new product, right? That is also digitalization. And everyone is correct from their perspective. So if we look at the maturity side, that whether my organization is mature or how mature we are, right? A few simple questions can help us answer that. One, how much time do we spend in collating the data versus analyzing it or acting on it? Second could be, are our operations teams doing repetitive tasks manually, or are they adding intelligence at every stage, right? Third could be, our customers, are they enabled and they get the information they're looking for very quickly or very easily? Or do they need to go through hoops, right? So answers to these questions can tell us how mature we are as an organization digitally. And coming to profitability, as Chintan said, right, whatever can be digitized will be digitized and will help us get to the profitability. I can think of 4 ways right now. So one is retaining customers, right? We all know repeat customers are more profitable than acquiring new customers. So the more we enable our customers, the more consistent experience we give them, the more self-service we give them, the more we communicate proactively, right? Digital channels have allowed a direct communication now. So it will help us retain the customer and in terms reduce the servicing cost and increase our profitability. Second area where digital can help is improving operational efficiencies, right? It's a very, very vast area. We talked about integrated platforms where we can get end-to-end visibility into operations. And that tells me, where is my inventory stuck? What is my sales pipeline looking like? Where are my receivables? So all of it put together, I can improve my efficiency a lot. Similarly, robotics, RPA is the buzzword, right? That can help automate a lot of different processes. So again, leading to cost efficiencies, leading to operational efficiencies for the firm. Third, and I think Girish touched upon it earlier, is cost of compliance. So digital, as in compliance, takes away a lot of time and energy from all the CFOs, all the founders, to away from core business, right? So filing taxes, creating regulatory reports, preparing for audits, all of it takes significant effort. And every mistake, if done, is very costly for the firm. So digital can help here by streamlining everything, generate everything from system and reduce your cost of compliance. And fourth, which we were talking about growth companies. So if we have automated processes, the incremental cost of growth is going to be a lot lower. So the higher the business scale, the more profitable we get, right? So that's the other advantage of being a digital first company. Obviously, there's always debate, whether I invest in digital transformation now or should I wait another quarter or another year, right? In my opinion, digital backbone is needed for growth. So, firms should invest in a scalable platform which grows with the business, right? So you have X number of features today, and then you have X plus Y and X plus Y plus Z in future. So that's what will enable us to grow profitably with the help of digital.
Oh, great insights once again, Dheeraj. A couple of things which I liked. As you said, I think invest in the right technologies, especially to cut away your time as CFO into those routine activities, and I think that will definitely help. I fully agree. And the second thing which I liked very much is the cost of compliance piece. That if you also set a good governance and use digitalization here in the right form and way, and I think you can also reap good benefits. Absolutely, cannot agree more. And that brings me to then another question, and I think you've said a right context. And there is no denial that we need digitalization. And digitalization will only help CFO focus on more critical topics and involve being really a good partner to the CEO. Looking at you now, Meeta, what do you think as CFO today need to look beyond numbers? What are they expected? They are expected to be strategic thinkers and agents of change. What's your take on the evolution of the CFO role? Please do couple it with the digitalization piece, and I'm eager to hear you. What do you have to say about it?
Thanks, Pulkit. So I think the role of the CFO has evolved in parallel to how the function has evolved, right? And to a large extent, a lot of credit to that also goes to digitalization, right? These, say, compliance is not going to go away from life, right? So are numbers not going to go away from life. But the thing is, The ease with which that they are available now at the click of a button frees up a lot of bandwidth to be able to think forward, right? And to that extent, I think digitalization is a way of life, like Dheeraj also mentioned. There is no escaping it, and the earlier we embrace it, the better it is. Because even on the cost of compliance piece that he mentioned, right, the real cost of compliance comes and hits you when something goes wrong. It's better that you have a preventive investment to compliance versus the cost. Coming to the second piece on, what kind of partnership CFOs are now expected to offer. It's very clear, right, that early, I think the general perception, if you step back 4 5 years, was that there are business teams, right, which is say your typical sales, revenue, marketing, etc. From there to needing a function that will spearhead and steward that growth, whilst keeping the guardrails of financial health intact, understanding what compliance is the is the crucible, or is that bundle offer that CFOs offer, right? And that, I think, is a very beautiful combination for the business or the CEO to have, because what you're getting is a one-stop shop solution where you understand what the long-term, medium-term vision for the company should be. How will that manifest itself into numbers? A sense of truth and sanity laid onto it, whilst holding the profitability metrics, right? So when even say at Licious, when we look at what roles do different teams play, finance has a very clear agenda and a mandate, which is, it's not just finance, it's making sure that you are holding the mirror, uh, catalyzing for growth, and delivering that growth and holding everybody accountable to it. So that's really the role that we play as CFOs.
Got it. All right. Thanks a lot, Meeta, for that insight. Well, Benjamin, what do you think about it? How has the role evolved of a CFO? I mean, you must be interacting with a lot of them on a daily basis. So, what do you think about it?
This is definitely a season of the rise of the CEO, right? Why do I say the rise of the CEO? I mean, complexity, and right now the ever-changing digital economy, where business models are evolving. You have new extensions, cross-geography. I think today the CFO role have rise into a business partner. And two attributes that's very important as a business partner. One is a trusted partner that builds a trusted business. Second pillar would be a business partner that knows how to operationalize in terms of productivity, in terms of efficiency, but more importantly, translating figures to actual business metrics. I think these two play a very key role towards key attributes of a CFO. Let me touch on point number one in terms of trust. Be it the different seasons of business, right? Now we're in the winter season, summer, spring, or autumn. The CFO keeps a steady hand, a steady ship. That in all types of seasons itself, as a single source of truth, and that backs the CEO in a season of fundraising, that's able to translate the CEO vision into real numbers, and therefore asking for more money, and providing the right data rooms and the data facts real time through agility and through proper explanation as well, be able to not only convince the external new investor, but more importantly, intrinsically, these values are burnt into him or herself. But more importantly, this is the team belief as well. So once you talk to a person, you can just sense, right? Not only the presentation, but the true representation and the articulation of why a certain number is a number like this in the business world, and more importantly, why more money is needed from a funding perspective. So Divansh also talks about launching of new products, entering into new countries, right? When more funding is required. Now, entering into a new business as a new product, while taking care of the back of the house, the efficiency is important. the CFO now becomes a pathfinder in a new country. Pathfinder of what I use the word blended financing. In fact, if there's one KPI that I want to provide to the CFO, right, as a business partner, one thing is to say, how do you stretch my $1 for the next 12 to 24 months? If you can stretch my $1 and return me back the value of $1.50 in 24 months, wow, I need not use my operating cash that I have painfully fundraised. I think that's a win for us, right? So blended financing could be in the sense of even right now ESG, right? Green financing. So today, if we're going to say banks have an obligation to make the world more secure, right? And therefore, if I'm going to enter into a new market, and if I'm going to build a new facilities, how can, from the ground basis, I build a new facilities with green financing in place? Or if we are not in green financing, how can I think about in terms of working capital financing, right? Third, if working capital financing is even not the thing for us, that's fine. Why don't we look into even trade financing? Can our APs, can our ARs be factored in? At the end of the time where invoice financing could be one possible. If I can stretch the $1 as a pathfinder once I enter into a new market, and because these numbers are reconciled on a daily, weekly, a monthly basis is no longer just a CFO and the team responsibility just to close the books, right? From an administrative, painfully standpoint, but it now becomes a business lifeline function that we need to know our position right now, right? And I think the true agility and speed comes into play where it's embedded into the CFO. So I think the second part here that I want to talk about the CFO, it's that Dheeraj has also talked about, is about talent as well. Often or not, as a co-business partners, they say, HR is touched by HR manager. I tend to want to say we are co-owners of this. Why? Because if the CFO is able to also co-motivate the talents, maybe we can pick the talents and increase the salary a little bit more of the existing team members to take up more responsibilities, right? And that's instead of hiring everything, looking out for fresh new talents from the external. Why don't we take the opportunity to motivate, right, our existing staff to do more, to take a blended role, right, and set KPIs to say that just like a commission, right, you're no longer the back of the house. If I'm going to set you up on 70-30 split, and this 30% is your commission for you to be able to partner with business development to open up new markets as you as a product manager is going to take up that role as potentially even a general manager in the new markets itself. I will incentivize you the 30% if you sell the first 100 products of ours, right? How about that, right? And then you're able to now motivate the talent. You no longer need to think about, should I cut someone in India and hire somebody at the valley? Will it affect the morale? How would this translate? The books might look good, but the execution of the morale might not be there. Now we are all co-business partners of this. And I think it is so important in the rise of the CEO, and ever more so in this season where change is a constant, whereby the CFO can be a business partner.
Well, absolutely. Thanks, Ben. I think you brought very interesting point about the softer aspects of the CFO role, which is trust and credibility. And as CFO myself, I can only confirm that while other things are important, but I think trust and credibility will only accelerate everything else that you're doing in the organization. So thanks a lot for that great insight. And that brings me to my last question, as we just spoke to Ben. And we have Harshit with us, who's also using the cloud ERP solution like Oracle NetSuite. So what role do you think a good cloud ERP system can play in startups' journey to profitability?
Thanks, Pulkit, for the question. But there's a story behind it, if you would allow me to. So this was something back around, I would say, 2017, 2018. And I was reading this book called The Great Game of Business by Jack Stack and Bo Burlingham. In this, the author was actually beautifully explaining about the roles and the responsibilities of the top line and the bottom line. So as every one of you would be agreeing to, that the top line, that's the revenues, is the prime responsibility of the business team, right? The sales team, the customer support team. The COGS was something that was purely being determined of how much is being going around into the support cost, into the other server and the tech cost. Whose responsibility is the bottom line? Is it the finance team's responsibility is the bottom line, or is it anyone else's team? The book actually delved upon that it's not just the one function's team's responsibility. It's all the functions within the organization who is responsible for the bottom line. You name it, the marketing team, you name it, the engineering team, you name it, the IT and the admin team, and you name it at the operations team, right? The finance team, again, acting as the support. The role of the finance team is to act as a facilitator. The facilitator in terms of not only collating the data, but equally communicating the data. And how often that communication should be. Should that just be quarterly to the investors? Should that just be monthly to your management? Or should that be as frequent as weekly or daily to all those people who are working within those functions and within those teams out there, so as to enable them to take the meaningful insights and the actions of how those numbers are there, which actually then helped me to analyze that, is this going to happen if your data is there and the collation is taking time? Would this happen if your data is lying on the different systems and you would need time to come out to the final data, and by the time you are communicating, the data is actually is rendered useless, right? It's rightly being said, the decision delayed is decision denied, right? Which is where it required us to actually move from some of those legacy systems to the systems of the new age, right? And again, this goes back to how we are functioning as a team, right? With some of the problems that I'm going to mention, which even Rohan, Chintan, and Meeta would actually agree upon and would chime in, is that some of those problems, right? Like data being available for the consumption in the real time. Like no need to take the backup and the local copies. No need to share the data manually. Things like having a central place where all the management happens, like solving for the automation so as to reduce all your errors, be it clerical errors and manual errors, numbers being readily be available for any type of reporting, and solving for the other obvious things like having multiple currency subsidiaries and the consolidation. Now, some of these things, right, like which could not be done if you're using the old legacy systems. Like if you keep on doing the same things, you will keep on getting the same things. You need to bring the change so as to see the change out there, which is what it has been there, and the system has been able to kind of help us to bring the data to the relevant users at the right time.
Thanks, Harshit. A very interesting analogy that you drew with the book, that it's not one person's contribution. There are several departments, several people contribute to organization's success. And to enable them to contribute, you need to have bird's eye view and integrate all these functions together. And that can only be done when you have a good ERP tool to your disposal. So absolutely true. And
but Pulkit, just wanted to add one more point, right? Like at the end of the day, it's something. It's not just about the tool, right? Like it's also about the people who are managing it. Things would not be doing the wonders just by bringing in something and then implementing it something. You need to ensure that you need to take it to the success, which is where not compromising the people and the commitment that goes behind in terms of making those, whatever the systems that are there, right? Be it not necessarily in the finance side, but in terms of any other functions within the organizations. Unless and until those internal processes are there, which are tightly packed, things would not be turning out to the way anyone would want to.
All right, guys, we're coming to the end of our session, and now I want to turn the table around. We've already 2 minutes past our appointed time. I'll quickly take up two questions and request our speakers also to briefly answer them, and then I will summarize our session today before we close it. So first question specifically for Meeta. Our audience, Mr. Chirag Mawani has asked, how important it is to have a positive operating profit levels, and what is the approximate operating profit percentage one should aim to have when it comes to new age D2C, digital to consumer companies?
Thank you, Chirag, for the question. Since you mentioned D2C space, I assume by operating profit, you are equating it to CM2 in your mind. I think directionally, it is absolutely important to have a positive CM2 because or operating profit, because what it tells you as an indicator is that your basic, offering design or unit economics, as we would call it, is structured right? Now, I would not go on to give a predictive guidance on what percentage is right, because that would depend on the kind of costs that sit below that, right? Which is essentially your marketing and your corporate costs. Now, and that is typical to different stages of an organization as well, right? If you're a very early stage startup, pre-revenue, or Series A, B kind of a setup, then definitely your corporate costs would be much more in terms of a percentage basis compared to a more mature startup, say at a EF kind of a level. That said, I think your CM2 percentage at any point of time should be at a level which is, I would say, between 15-20 basis points above what you would expect to have as your corporate costs, right? That's a starting, just a general thumb rule. Now, depending on the margins and the kind of industry profile you are in, it could vary very differently.
Okay, thanks a lot, Meeta. Next question, and the last one to you, Chintan. I thought you would be the right person to answer, running the wide spectrum of companies that you run, and especially the most famous one is Naukri.com in the recruitment space. The question goes like this. Compensation last year shot up due to excessive funding. What is the trend expected in the future for top honchos of the startups?
And that's the tough one, and most interesting one. But let me go back to some of the comments that that came earlier about the talent. Viraj made a comment about it. You also added. So talent is absolutely necessary, is absolutely must. And it's not like fat; it's more like muscles. So you require that to build your capabilities, right? I think what has happened, is that just like we had this disruption in supply chain, right? And when we talk about the commodity market, I think there is also a disruption that has happened in the talent chain, right? So I think that's also, you need to look at that as a part of supply chain, and that has disrupted. And because of combination of variety of factors, I think market, even as of now, it's pretty buoyant about that, right? So obviously there is an increase in terms of compensation and all. I think all that we can do most is that we can tie it up more and more tightly with the performance, right? So that we can manage the whole the profitability aspects as well. So that if there are results, there is a cost to it. If it is not, there is no cost to it. Right? So I think the more and more we tie it up with the actual performance, and that's easier said than done. But I think more time we spend in ensuring that we kind of build it up along with the KRS, and there are various level of performances, and we build a model for that. I think that is the way to go.
And maybe I can add to Chinta's point, right? If I may, not all package will be all pure cash. Now it's also good to take a look at the employee stock option scheme, and obviously, we drive co-performance and success together, right? And there's a certain performance share, ESOP, employee stock option scheme, that will be able to provide based on a certain vesting period. And this also helps to ensure that we retain the right people, the right talents, right? at the right time as well. So I think that's an option for entrepreneurs and business owners to think about as well.
Absolutely. Thanks a lot for that add-on, Ben. And thanks, Chintan. Audience, with your permission, I know we are running already behind the schedule, but the discussions were really so interesting. So with your permission, I'll take 3 more minutes to kind of wrap up the session, and then we will close the interesting discussion that we had today. So, all right. I have to say, and I think as was also mentioned at the beginning, very interesting time, not just for startups, for all the companies, because of the interesting events that are unfolding ahead of us. And for me, couple of key takeaways that I take, and I'm sure audiences, you would agree as well. The first takeaway, coming out from Rohan especially, that you can improve what you can track. And that means that CFO needs to be in control of processes, information, and resources. And a good ERP can help increase efficiency, visibility, and in turn, profitability. The second and most important one, at the cost of repeating, talent funding. We need to invest in skills and human capital as well. We tend to ignore that. And for us, it's a good fat in the body. So we need to really invest in that as well, while keeping in mind the cost-cutting pressure that we may already have. Third and the last one, accelerate our digitalization journey and leave all our mundane activities to the robots so that CFOs can focus on more strategic topics. And I, of course, also do not hope that digitalization will also start to moderate sessions like how I am doing. So it's not that mundane an activity. It's quite interesting one. So really good to have all of you. Thanks once again for sharing your insights. Thanks audiences for being such a sport to share your questions. I'm requesting organizers to please answer the remaining questions and post it on the website and inform the audiences. Thank you. Have a good day and good week ahead.
Thank you, everyone.
Thank you.
Thank you, everybody.
Thank you, everybody.
Thank you, everyone.